What's up everybody, Tom here with another video. Today we're talking about the latest stock market news along with our technical analysis thoughts on the S&P 500, Nasdaq, volatility index, Apple ahead of the news event, and US dollar. The stock market is bullish again, and from the patterns that we are seeing, there might be a lot more to come. Let's now take a look together. Stay tuned. Okay guys, so as we like to do on this channel, let's have a look at the last 24 hours in the stock market. One of the ways we can do that is by using the FinViz heat map tool. And we can see something that we talked about yesterday came through, and that was that Google and Facebook ended up outperforming the other FANG stocks because they were lagging. This is not the first time we've seen Microsoft, Apple, and Amazon basically show us the trend, and then the next day, if not next week, Google and Facebook lagging behind but making up some grounds. I think most interestingly though, yesterday was all about the energy stocks, and in our live streams, we've mentioned this quite a few times over the last few weeks. We did a lot of Exxon analysis in the live streams, and it was clear to see that they were starting to achieve a very low point in the markets. So the S&P 500 outperformed the other two indices yesterday. We saw the Dow Jones and the Nasdaq put on around 0.4%, and the S&P 500 broke past a very important zone and made 8.8% overall. If we take a look at the sectors though, this is where it'll become very clear that the energy sector was the one pushing the markets yesterday, a rare occurrence during this crisis period. We had, of course, a pickup at the start of the day, followed by a bit of a lull, and then a strong end of day buying session for the energy sector. XLK, the technology sector, actually didn't do that well for the day and was one of the most underperforming sectors, and utilities overall is still looked to be in rotation. And this is why we look at these sector charts. Understanding the rotation in stock markets is super important when it comes to trading the different sectors and different indices. CBOE put call ratios increased really heavily. We had a 1.81 reading on the SPX, and this is well up from the 1.4 to 1.5s we were seeing a few weeks ago. What this really is showing us is that there's a lot of downward momentum pressure being put on, as in people are buying puts thinking that market's overpriced. What do we know on this channel that usually happens in those circumstances? Unfortunately, us, the retail traders, often are putting on positions that Wall Street will end up expiring, and the higher the put call ratio, the less likely it is to occur. It's kind of that self-fulfilling prophecy, is if everybody thinks something, it doesn't happen. And that comes very clear when we look at this oscillator of fear and greed as well. We're basically still in the middle of the zone, but we have a very high put call ratio at this point. So let's talk about oil. Oil has been pretty much the story of the last couple of days in terms of strength. And I think when you look at a weekly chart here for US oil, it becomes very clear why. Very strong weekly body support, and we saw a very nice big bullish move off this. If we go down to the daily, look at this. We had a low followed by, of course, a very equal low around this $37 a barrel price. And then we've had a big bullish momentum pickup, and we've just hit resistance at around this $41. Now, what does this look like on a chart? If we think about oil and we think about what just happened, it pulled back and it looks like a giant double bottom, or what could become the beginning of a channel pattern. So we basically got oil into resistance right now, and what I generally do with these charts is I might use US oil, or I might have a look at Brent as well, just to see whether one is showing us a different break or a different close or a different pattern in general. If we think about what's going to happen next to US oil, usually if it breaks out above this zone, we expect it to go, of course, bullish. And in this case, we would expect it to go the distance. The distance would make a new high for oil upwards of around $45.50. A very important break zone above the previous kind of $44 area, which has been long-term weekly support and resistance. So a bullish break here of oil may even make oil go up to $50 a barrel. And as we come out of this crisis, we do expect oil to continue to increase. And then, of course, long-term, there'll be problems with it. But for the short term, there could be increases seen here. So we're at a critical point as usual when we hit resistance, and for now we're stuck in the range, but if we break out, it may be worthwhile taking a look at. And it certainly explains why the energy sector did so well yesterday. So what about the US dollar, guys? What's going on there? Well, the US dollar remains really in our little zone. We've talked about how if it gets below these 93.50, 93.40 zone, that we'll end up probably down at the 92.80. We're currently trading at 93.56. And we don't really have a clear direction on US dollar. It seems to be that it doesn't want to go high right now and it doesn't want to go low. It's not trading in very large range for the last couple of days. And this is not unusual around an indecision point. Usually news is the thing that pushes these kind of currencies through, and the US dollar is having a bit of a chill while it makes its next decision. We'll continue to follow this on the channel as it's very important to our overall sentiment on the markets. Speaking of the markets, what about this fear index, the VIX? The VIX has come right back down. We never breached our 30 level. This is the 4-hour chart here on the CBOE VIX contract. And you can see that fear is coming out of the market. We actually tested the 25 yesterday and fully rejected that very quickly on the VIX. It shows that this is a very important zone. Now, what do we know about a few things? With the VIX, we've been in a range. That range is between 25 and 30. If we take that range and extrapolate out the 5 points, this would obviously mean that if we get a break close underneath the 25 level, we're probably going to be setting up for a 20 level. Now remember, if the VIX is dropping and the market is going up, that's actually a very positive sign for bullish intentions in the market. It often melts up through that time. Now in this case, if we get the VIX closing under 25, we could see a lot of fear coming out of the market in the next couple of weeks into the election as we await that news. And that would be significant because what it would say is that the pattern that we're seeing on the S&P 500 could be in play. And that's a big inverse head and shoulders pattern, a big bullish pattern that we're about to look at. So this is all kind of setting up on the VIX, but we need to get, of course, below the 25. For now, the bears can kind of remain. If we can keep buying off this level and keep spiking the VIX up, there's a chance of course, the market reversing and going down. Well, Dr. Copper continues its strong bullish price momentum. And if you have a look at it on a chart, some people have been calling it like a left shoulder here, right shoulder and head pattern. I think overall, we can just look at it as its bullish intention. And at this point, it looks like it's strong and it wants to probably go back and test the 3.1 level. Overall, copper's been a decent sentiment indicator. It gave us kind of an early signal to a little bit of weakness in the market. And then now that the strength is back in, it makes sense to, of course, the patterns that we're seeing on the major indices. I think, though, that when we're in bullish times, it's worthwhile looking at stocks and worthwhile thinking about sentiment. So next week, we have Apple's October 13 high-speed event. And what does this mean for the markets? Well, this particular event is all about, of course, the new iPhone and discussions about that. There might be some surprises as well, we can only hope. And of course, stockholders around the world and Apple often buy into these types of events. So what I think we can all do together is we can always look at opportunities on these particular stocks. Now, where did Apple get to? Well, it got to a 138 basically during the peak of the euphoria only a few months ago. We're now trading in 115 ahead of the news event, and we're kind of getting into a range between this 112 level 50 and this 118. So you can basically start to trap the market within a range, think about it that way, and potentially play off it into news events. It's always an idea and something that you can do when there's maybe not other things going on in the market. So definitely worthwhile checking out your Apple charts and having a look at structure and formation. And there is a little bit of coiling going on here on the right-hand side for Apple. So maybe worthwhile looking at the smaller timeframes. We'll be following this over the next week. Let's go and have a look now at the major indices. We'll start with the Dow. So yesterday we mentioned that we saw an inverse head and shoulders here on the daily chart. We also mentioned that there was a bullish intention candle here, followed by an engulf, which was probably going to lead through more imminent bullish pressure in the markets. So now we've clearly closed above, and we're basically at a point now where it seems like this pattern is in play. There's two things that happen now. Either we get a retest of previous resistances and that becomes support and then a bounce up, or the market continues to kind of go up slowly and then pull back to a shorter time frame moving average. So the Dow will be worth watching on the smaller time frames. And of course, it's an important pattern upwards of this just under 30,000 level. Let's now take a look at the SPX. Now we're doing the analysis as always on the major market, as in the SPX open times, not the futures contract. We do this because it enables us to see the correct moving average crosses and of course where the true volume is. At this point, we have a pretty nice 2050 cross. We obviously got that yesterday. We've got a clear close above the previous resistances here at the 3420 to the 3430 zone. And we're trading at the end of the close at 3446. So pretty strong market overall, led by, of course, the energy sector yesterday. What this inverse head and shoulders is showing us though, in terms of the distance range, is that it's not only going to put pressure on the 3600, but potentially an all-time high. So we've got our head, our right shoulder, and of course, it makes sense to also the price action. The right shoulder not as low as the left shoulder, showing bullish intent, and strong buying pressure off the moving averages as well, which crossed just before the market broke through. So this usually signals a pretty strong kind of bullish momentum area, and what we expect from the market is probably a pull up, as in it moves higher, maybe finds some resistance at something like a 3500 zone, and comes back and gives a conservative entry where it tests the previous resistances and they become support. We've seen that happen a lot of times over trading the indices in the last couple of months during the crisis period. Notice over here, we obviously had a break close above, and then we came back and tested the 3000 level, and several times throughout that we had even here a break of the 3220 zone, and then it came back and tested the level. So it will come back and test the 20 moving average at some point on at least the 4 hour, and right now it's moved decently far away from it, so we might have a little bit more bullish, bit of a kind of exhaustion period where it does a bit of a smaller time correction, and then it looks like it's bullish now for quite a long time. It would take a fundamental piece of news to really ruin this technical pattern, and at this stage it doesn't seem like we're going to get one. Onto the Nasdaq, very strong pattern here as well. We're putting testing pressure back on the 11600. The Nasdaq, as we've mentioned, is not really the flavor at the moment because, of course, a Democratic win, if that was to happen, may be negative towards taxation and other profits of the major FANG stocks. That being said, we're testing the 11,600 zone here. We do have a strong level of resistance, and if we break through and close above that resistance, we expect the market to go to something like 11.8, and then of course maybe pull back, test the resistance, which becomes support, and then there'll also be a moving average there probably at the same time, like a 20, and then hopefully bounce back up to the 12,000, 12,200, and 12,400. We usually expect the Nasdaq to move in 200-point ranges. It seems to like gravitating to those areas, and there's still a lot of movement up until previous highs. We're going from 11,600 to almost 12,500 in terms of where it did get to previously. So there is a decent amount of gains to be had if we believe it can get back to those levels before, of course, the September crash or correction period. Let's take a look at Bitcoin as well. A few of the gold stocks and of course silver was all doing quite well with the dollar falling a little bit yesterday. We also have Bitcoin breaking out of this particular symmetrical triangle I had it trapped in. We could see here the series of highs became resistance. It clearly cracked past those, hit the horizontal resistance of around that 11,000, and now it's starting to coil through it. Pretty much with this, you can either see it come back down, test the 20, and then test obviously the trend line, and then bounce off, or we may see a continuation of coiling on the smaller time frame, followed by a new high. And Bitcoin could be quite explosive here. We've talked about if it gets past the 11,200 zone, we expect it to go all the way to just under 12,000. And we do that because there isn't really much resistance and support that's any problematic once it gets past that 11.2 zone. So something like a break up here and move to 11.2, then a sell off a little bit, and then of course a further close up could be a very strong type of pattern on Bitcoin. Now that we've broken past this symmetrical triangle, we can also take the distance of 2/3 through this triangle, and then you extrapolate that distance out, and that usually is where you expect the take profit to be. So in this case, we do expect it to move higher. It's not quite to our 12,000 level, but I think that once it gets up here, it's going to gravitate to that psychological zone. We hope you enjoyed today's video. If you did, please remember to subscribe and of course hit that alert button. We'll be seeing you with some videos over the weekend. Live Monday session for the Monday Bell, always a great event, so join us then. And overall, I hope everyone stays safe, healthy, and makes as much profit as possible in the markets. Bye for now.